So today we're going to be talking about all things audit, your area of specialism. Differs quite a lot from the kind of work that I would do day to day, which is your basic accounts prep and sort of tax preparation. So would you mind starting off by just talking in sort of basic layman's terms as to what an audit actually is?
Of course, yeah. So an audit is an independent examination of a set of company accounts. So it's designed to give stakeholders, directors, business owners some assurance over the financial statements, their credibility, their compliance with the laws and regulations, their accuracy, that kind of thing.
So the difference between an accounts preparation job, as I would call it, the sort of services that we would typically provide to smaller organisations, is that opinion of the auditor on the quality of the records, or is it broader than that?
Yeah, so it is the assurance that's given on the financial statements would be the differentiating factor. So for an accounts preparation job, you're taking the accounting records and you're putting them into that format that's required by law. And the audit is effectively taking that sort of one step further, and it's looking underneath the accounting records, so the trial balance, into the supporting documentation to make sure that actually what's reflected in the accounting records is true and fair. So it does look at compliance with laws and regulations, but it also will look at the underlying documentation that supports those accounting records.
Okay, so typically, rather than just taking the figures provided by the accounting software of a company, the audit itself would look into invoices and processes and systems almost?
Exactly that, yeah. So we would be looking at, exactly contracts, invoices, correspondence, all manner of sort of supporting documentation that we would get from the company itself. And then what you get at the end of an audit will be an opinion on the financial statements. And that opinion is then included in the financial statements once they go onto public record, so that everybody can see from the registrar of companies what the auditor's opinion on those financial statements are.
So it's almost a professional check that everything is being done not correctly, because I guess you're not giving a 100% opinion, because the concept of materiality is something relevant in audit, is it?
Yes, that's absolutely right. So, there are some occasions where you are able to provide some absolute assurance over a particular area just through its very nature. But, you're absolutely right. Materiality as a concept means that we will be able to say that they are financial statements are materially free from error, i.e. there's not expected to be any large errors remaining undetected in the financial statements. There is a bit of a misconception that actually auditors are there to detect fraud, which isn't the case, and they refer to that through your exams as the expectation gap, and that is something that's quite challenging for auditors to sort of dispel, I guess, because it is actually the responsibility of directors to identify and prevent fraud. However, it is a natural byproduct because we're looking at so much supporting documentation that sometimes we will come across that kind of thing. So that will also, information is provided to directors in that regard, but it isn't actually the point of the audit.
Yeah, and I guess over the last few decades, in fact, there's been a number of high profile stories and scandals around audit and fraud and such like, and we could probably do a whole other podcast on that very issue, so maybe that's one for the future. But no, thank you for that. And I guess sort of my next question really is, when would a company need to have an audit by law? What governs that process, and when you need to start considering that as a director?
Yeah, so the main thing that would get a company into the audit regime would be size. So there are size limits around turnover, around total assets and liabilities, and then employees. So they're actually changing at the moment, but typically if you hit two of those three sort of size criteria and therefore are not considered to be small anymore, then you would need an audit. And I say typically because, as with anything, there is always nuances and little details that you need to consider. Things like if you happen to be a UK subsidiary of an overseas entity, if you're part of a group, if you do regulated activity. So best to explore that with your accountant if you need to. But mainly it's size related.
Okay, understood. And so where a company may be growing, increasing in value and trading activity, and need an audit for the first time, or I guess know what those thresholds are and can see that they may need an audit over the coming years, what would you say are the main considerations that the directors would have to think about in advance of needing that first audit?
I mean, I would say the first thing to do is don't bury your head in the sand. Don't sort of push push it down and think, well, I'll worry about that later. Because I do think planning and good preparation are one of the main things that make an audit successful. I would say probably the first thing to think about is appointing your auditor and making sure that you give that process enough time, which sort of links back to that planning point, really. You really need to make sure that you appoint somebody who you can work with, because an audit, I'm well aware as an auditor of what people can think about audits, but actually it can be a really beneficial process if the directors, business owners, finance team are sort of bought into it and it's a collaborative process. You're going to get the most out of it. And so if you start that process early and you plan and you communicate well with your auditors, you're certainly going to get way, way better output. Obviously, collation of information, there are times, much like your accounts filing deadlines, they don't change whether you're audited or not. So, but now you have to get an audit into the same time frame as you were perhaps previously just getting your accounts prepared. So yeah, I would say number one is planning. Number two is getting the right person in there to help you.
So as an auditor working with a company that's having an audit for the first time, how much guidance in advance of the audit process would you typically provide in order to sort of help those directors be ready for the actual audit? Is the planning and preparation aspect important and time consuming, or do you just expect the company sort of to be ready on day one with everything that you need?
Gosh, no. It's especially if a company is being audited for the first time, I'd spend some time with that finance team, with the directors, to make sure that they knew exactly what was coming. Because, when I talk about planning, I don't sort of just mean for that business, it's for us as well. We need to make sure as auditors that we have a good understanding of what the business does, how it operates, because that then feeds into how we build our audit testing. And building of audit testing is something that I think should be collaborative. It should be discussed with your finance team, with your directors, so that they know the kind of information that we're going to be asking for. That means that they can put it together ahead of time, that they can not be completely blindsided by the questions that we're going to ask. There might be considerations like stock taking. You want to be doing that ahead of, or you want to be planning that ahead of your year end, because that can bring some quite significant challenges if you're appointed as an auditor after year end and the company has a material stock balance. You can be on a really sticky wicket if you haven't attended a stock take. So for me, and I think a lot of my colleagues would say that the planning is the most important part of the process, which is why it's so disappointing, I guess, when we're appointed so late in the time scale. Yeah,
planning's key. No, I understand that. And I guess, as you touched on previously, with the thresholds increasing, but also I guess we are seeing some businesses in some sectors in today's climate, activity reduces slightly. So there are companies that are falling out of audit. So for those guys, is it sort of, let's have a party, we don't need an audit anymore, or are there any reasons why they may want to continue to choose to have an audit? I assume they could do that, or what are the main considerations for those businesses who may not need one anymore?
Yeah, you're absolutely right. We're probably going to get laughed out of town when we suggest that businesses should have audits when they don't need to. But obviously, as an auditor, I think that the process is really beneficial. And I know that working with clients who haven't necessarily had to have audits in the past, they also find the process useful. And that does come back to making sure that you're working with somebody that you get on with, who understands your business, because some of the outputs of audit are not just, yes, all right, you've got the audit report on the financial statements, but there are other outputs, observations and commentary on business processes and policies, because, of course, your auditors are looking at an awful lot of your sort of supporting documentation. They're in your businesses, they're speaking to people, but they're also in numerous other businesses throughout the year. So they're seeing other pieces of software, other policies and procedures that are working. So they're well placed to be able to make observations on your business. They may, whether it's the same industry or other industries.
One other thing I wanted to discuss really is sort of your role as an auditor, because of course you're independent from the company itself, and therefore providing additional added value services must be tricky. I assume there are rules governing that, and how you try and give the best service you can whilst staying independent. That must be a bit of a challenge.
Yeah, definitely. And there's a real balance between providing that robust audit that you talk about, and then sort of a business feeling like you've really kicked its tyres, but also sort of being supportive and not chastising people for making mistakes, which of course they always do. But I do think that sort of, again, and I hate to keep bringing it back to making sure that you've appointed the right auditor, but having a strong relationship, having good communication means that actually that open, honest sort of channel of communication works. It means that actually both sides feel comfortable bringing things up. And the robust audit is absolutely necessary because people, stakeholders, lenders, customers, suppliers, they're all relying on that audit report. And just coming back to one of the questions that you asked earlier, that's another benefit of an audit that may not be linked to regulation or legislation. If you're a business that provides your financial statements in the course of business, whether that's to suppliers, customers, banks, grant providers, for example, if you work in any stakeholder, then having an audit opinion on them showing that they are prepared correctly, they are materially correct, there's no sort of issues with them, just adds credibility and weight to that information.
Yeah, and I guess we've touched a bit on companies needing for an audit for the first time and companies no longer needing an audit. But I guess for those larger organisations that will always fall within audit, do you see that the finance director, financial controller, that the team around those, they embrace the fact that they have this audit and try and make the most of it, or is it constantly, I wish we didn't have to have this? Is there some kind of understanding that we need to make this work for us?
Well, of course, all of Lovell Blake's audit clients fully embrace the audit because they get wonderful output from it. But I mean, I just, because it's unavoidable. It is a compliance function. It is something that companies have to do. And sometimes that can be a burden. But again, I do think that if it's engaged with properly, and I do understand that, these finance teams, they have a day job. But it doesn't need to be a burden. It doesn't need to take up loads of time. It doesn't need to go on for a long time. But I think expectations on both sides of the table needs to be marked out, and then your auditor and your finance team can work together to achieve something. Whether you have to have it, whether you want it, the process is going to be the same, and you should be able to get something out of it as a finance team, as a director, as a business owner. Yeah. Irrespective of whether you have to or not.
Embrace it. Yeah,
absolutely.
And finally, I guess your position as an auditor, for me, I guess it must be very interesting to have such detailed insight of such a variety of different sectors, different companies, different businesses. Is that how you see it? What are if you're talking to the next generation of auditors out there, what are the enjoyable parts? Why do you love being an auditor?
I've done it for a long time, and I genuinely still will tell people looking to join accounting firms that audit is the absolute best service line because it gives you insight into such a different variety of business. I can't think of many other jobs where you can be in a manufacturing business one week, you could be in a charity the next week, you could be in a wholesale business the next week, you could then be, I don't know, in an architectural firm the following week. You get such broad insight into lots of different businesses, and just the experience and the general knowledge that you can obtain going and talking to business owners in all of those different works of life. For me, I'm quite a nosy person. I like understanding about businesses and how they operate and the sectors that they work in. And I just think the breadth of what you see as an auditor is just unchallengeable.
Fantastic.